Hi, welcome to Bond Bytes, the daily bond market highlights from INR bonds. I'm Arjun Patsati. And with inflation expected to come down in India from below 7% for the month of July, and US inflation came down from below 9% to 8.5% levels, markets are cheering inflation, falling inflation, expecting that central banks will raise rates, but then inflation will come off and interest rates will stabilize. So 10-year Gsec yields fell, equity markets were up, the rupee was better. And in corporate bond news, Fullerton India is issuing 10-year bonds at closer to 8.4% levels. But back to inflation, and we talk about cumulative inflation. And just before that, INR Bonds partner portal is available for financial advisors to help their clients invest in bonds with the most transparency, most information, best investment process, and with our own risk model, proprietary risk model. And financial advisors are now seeing that they are adding much more value to clients on their fixed income investments through INR Bonds transaction partner portal. And financial advisors are increasing their assets on fixed income by helping clients invest better, save better to fixed income through INR Bonds partner portal. Log into INR Bonds and sign up for INR Bond partners.
As a financial advisor, my biggest responsibility is to help my clients make the right investment choices. Now, with INR bonds, buying and investing in bonds for my clients is quick and easy. With my guidance on bonds, my clients are happy and I'm getting new business every day. Register as a financial advisor on inrbonds.com to help your clients invest and save better through bonds.
Back to cumulative inflation hits hard. Cumulative inflation is hitting markets very, very hard. And the investors consumers. So basically, when I say cumulative inflation, it's if inflation goes to 10% and comes down to 5%, it doesn't mean that actual prices have come down. It's only that the pace of growth of prices have come down. And INR bonds has always been talking about cumulative inflation. So unless markets can give better returns than cumulative inflation, on an inflation adjusted basis, the returns to the investor are actually negative. So hence investors will have to make sure that their investments earn more returns than what cumulative inflation or prices of goods and services is than the prices of goods and the rise in prices of goods and services. So return should be higher than the cumulative rise in price of goods and services. Otherwise, on an inflation adjusted basis, they are not making any returns. In fact, they could even be making capital loss. Thank you very much for listening in. Do not forget to subscribe to your YouTube channel if you've not done so already. And download our app, Quick Invest by INR Bonds, for the best in-app investment experience in bonds with the most information, transparency, and a seamless in-app investment process.
It was a tough journey going from an intern to a senior professional. Now, to protect my savings against high inflation and grow my wealth, I invest in bonds with INR Bonds. Download the INR Bonds app to save better.